Are you afraid to risk your hard-earned money in binary options? Well, BinaryOptionsCashback.com give you an ability to invest your money without the risk of the initial deposit. How does it function? Would you like to invest in binary options but it scares you to think that you could lose your money? 1. Select any broker from our selected web banners. 2. Open an account and deposit the recommended amount. 3. Send us an email to webmaster@binaryoptionscashback.com with the following details: name, broker's name, deposited amount, and the desired method to receive your money back, i.e. PayPal, money brokers, or bank account. And within a short duration of 30 days, you will get the return of the deposit. This advertisement comes with no obligations. We don't require any minimum amount of trades, and you can withdraw your deposit whenever you want. On the other hand, you can open an account with any or all brokers listed and receive a consequent refund.
Hello class, this is Brian from FinancialTrainingSchool.com and welcome to BO 111 Money Management. So before we start, you should watch the following videos as prerequisites: GT 209 Patience to understand account growth, GT 210 Money Management to understand the concept of money, and GT 303 Diversification to understand the 3 risk classes. So I'll start off by outlining the general rules of money management, then I'll give specific number examples for each risk class. And the 3 risk classes are risk averse, risk neutral, and risk loving. For the risk averse people, if you can't tolerate risk, then don't trade. Stick to investing, because binary options are short-term trades. But if you do choose to trade, follow the same numbers as risk neutral. Risk neutral is just the normal money management strategies. And then risk loving is basically 2 to 3 times normal risk amounts up to potentially all in. And as an aside, all in strategies, quote unquote, will be saved for another video in the future. So here are the common criteria for money management for stop loss rules and risk management. So for stop loss rules, you might stop trading after X trades, i.e. fixed number of trades per day. Or you stop trading after X losses, i.e. max trades you're willing to lose. Or stop trading after $1 gain or loss. This is a common daily goal for people, so you might want to gain $20 a day, or you want to lose $10 per day, or something like that. Or you'll stop trading after an X% gain or loss per day. And this is usually a nice weekly or monthly goal, because on a day-to-day basis, you'll go up and down 1 or 2% per day. But then overall for the week or the month, you might want to gain 10%, something like that. Or lastly, you might stop trading if you're below an X% of trades. So this is like your win ratio. So if you want a win ratio of 60 or 70%, then you'll stop trading if you're below this. Then for risk management, there are 2 criteria here. First is the max number of trades per expiry time. So i.e. per 15, 30, or 60-minute period, you make a max of 2 or 3 trades. And the second way is a max percent risk per trade, i.e. max risk exposure per trade. So this is kind of like 2 or 3% per trade or something like that. All of these rules and criteria can be combined or used individually, so the final choice is up to you. Just don't give yourself too many rules, because the more you have, the harder it is to follow them all. I myself only have 1 or 2 rules that I follow, because if you have 5, then you're going to find yourself breaking them at least 1 every day. So don't do it. Just get a few of them and start trading. So here are the specific number examples for each risk class. You have risk averse and risk neutral on the left side and risk loving on the right side. I'm just going to read the left side and then basically just double or triple the numbers for the right side. So for risk neutral, stop loss rules are kind of like you stop trading after 5 trades, or you stop trading after 2 losses, or you stop trading after 4% gain or loss, either one, or 2% loss or something like that. Just make up different numbers for whatever your risk level is. Or you stop trading if you're below 60% of trades. So this is if you're aiming for a break-even 60% win ratio. Then for risk management, you might have a max of 2 trades per expiry time, or you have a max of 2% risk per trade. Then also you can have a combination of the 2 criteria above, so something like 2 trades at 2% risk, which means you have a total of 4% risk per expiry time. So just double these numbers for the risk-loving people. And also some food for thought. Let's say your win ratio goal is 80%. So you want to get an 80% accuracy, but you reach your income goal of $50 gain for the day with a win ratio of 66%. Do you continue trading to raise the 66%, or do you stop? I would suggest you stop as soon as you hit or reach any one of your rules, if you have more than one. So if you have 3 rules and one of them is a dollar gain, one of them is a percent gain, and one of them is a max loss, as soon as you reach one of them, just stop. So if let's say you reach 2 losses, stop. Or you reach $50 per day, stop. or if you reach your 80% already, stop. Some precautions to take into account. Most of these rules rely on self-discipline, but one of them relies on your account size, i.e. the percent risk. In order to utilize the appropriate percent risk, you need to have the necessary funds in your account. And you might ask why. Well, not all brokers have a low minimum trade size, so my 3 recommended brokers are 24 Option, Bank to Barney, and Trade Rush. 24 Option, who happens to have the most appealing in terms of trade features, has the highest minimum trade size of $24. So if you were to risk 2% per trade, $24 divided by 2% risk is $1,200. So you need to have a balance of $1,200 in order to trade 2% risk. And for new traders, this is a lot of money. So you might not have that much to start off with, compared to Bank to Binary, which only has a minimum trade size of $1. So that's very good. But their minimum deposit is $500. So depending on how much you have to start with, they are the best bet to go to. And then Trade Rush, which has the lowest deposit of $200, has a minimum trade size of $10, which is about 5% risk. So out of these 3, in terms of money management, like I mentioned, Bank to Binary is the most attractive due to the freedom of trade size. So don't let anyone talk you down or badmouth you if you're trading micro accounts or trading micro lots or $1 trades. Who cares? Because it's your money that you're trading, not theirs. You trade whatever you're willing to risk up to your own comfort zone because it's your trading, not them. Now that we've established the criteria for money management, the next question to ask is, how often do you modify your criteria? So let's start off with a scenario. Let's say you have a $500 balance and you're risking 2% per trade, which is $10, and let's say you win 4 trades today at 80% payouts. This brings you to a total balance of $532. Now, for all of your fixed number rules, these can stay the same forever. E.g., if you had a 4 trade per day rule, you would stop now because you made 4 trades. Or if you were aiming for an 85% win ratio, you would stop now because you have 4 out of 4, 100%. Or if your goal was to make $25 profits per day, you would stop now because you reached $32 profit. But for the percentage rules, here's something to consider. Tomorrow, do you use the same 2% as today, which is $10, or do you use the new 2%, which is $10.64? The numbers I'm using here are small, but imagine if you were trading larger accounts, so it would be a big difference. So if you're using the new 2%, this is essentially what compounding profits is all about. And I'll make a separate lesson in the future for compounding profits. But for now, there are 2 ways to adjust your 2%. Account brackets and monthly balances. For account brackets, this means for every $500, you adjust your 2% accordingly. So $10 trades for the first $500 and $20 trades when you reach $1,000, and so on. And you just up it $10 every $500 from here on out. Or if you're trading 3%, then it would be $15 every $500 from here on out, etc. In addition, you might want to add an extra $50 or $100 gap for risk-averse people to avoid being bumped down to a lower bracket if you sustain losses in the new bracket. For example, let's say you reach $1,000 and then you up it to $20 trades and then you lose the first trade. That would bring you down to $980, which would technically bump you down to the lower bracket of $500 and you'd be back to $10 trades. So you might want to wait till $1,100 or $1,050 so that if you do lose one, you're still in the new bracket. So that's just something to consider. As for the second method, which is monthly balances, this is where you trade a fixed 2%, which is determined at the beginning of every month, and you only change this when a new month starts. So let's say you start this month at $500, then 2% would be $10. If you start next month with $750, then 2% would be $15, and you keep $15 for the whole month, and then you change it again the next month. Between these 2 methods, monthly balances is more conservative because you only change it 12 times a year, compared to account brackets, which depending on your trading style, if you're more aggressive or if you grow really fast, then you can change it more often, or if you grow really slow, then it might be even more conservative than monthly balances, etc. So some final notes. As always, I'm presenting these as guidelines. I just listed all the commonly used criteria, so just try some of them out and see what works for you, because it's your money, not mine. You're in control of your own account. And lastly, even if you set rules, some are hard to follow. For instance, if you don't lose until the end, you might get optimistic and overtrade until you do lose. Or you might end up losing in the beginning, and then greed might kick in and force you to recoup your losses, leading to impulse trading. So overall, just try to stay in control and learn to catch yourself slipping so that you don't slip and you maintain your rules. Just pick a few rules, 1 or 2 rules like what I do, and then just trade with it. So as usual, my recommended brokers are 24 Option, Bank to Binary, and Trade Rush. Make sure you guys use my links when you sign up to get an hour of tutoring with me. Full details can be found at ftstutor.com. So that's it. Hope you guys enjoyed this video, and I will see you guys next time.